Hello, my dear student. How are you all? Everyone fine? I hope everyone is doing great. Today we'll have a discussion about multiple choice question. Now we all know that in our exam, multiple choice question will play a very important role to get a good score in exam. Not only in FI paper but in all six paper. Let us understand mathematically how MCQs are very important from examination point of view, which will actually eventually help us to get an aggregate of 300 marks if you are writing both group. Correct? Let me explain you. You can see that MCQs in total all 6 paper will be of 180 marks, 30 into 6. And the balance descriptive question will be of 420 marks. So balance means 70 into 6. So it is 420 marks. The total becomes 600 marks. Out of 600 marks, we are here to score 300 marks, exactly 50%. Of course, we need to score 40% each in each paper. Aggregate 50% marks is required. Now, if you can score 20 or more than 20 marks in MCQs, let us take the lower limit. If you can score 20 marks in every subject in MCQs, so we are getting 120 marks in MCQs. It means from balance 420 marks, we require only 180 marks. Now, if you see that if you can score 120 marks from MCQ, so you only require to score 180 marks from balance 420 marks, means from balance 420 marks, you need to only score 43%, which is 100% achievable. So, MCQs is a very important part for getting an aggregate of 50% in CA final examination. So, you should always give importance to MCQs. Therefore, from today, we'll be discussing chapter wise MCQs for each chapter. What I will do that every day I will upload a video for each chapter in which we'll be discussing MCQs for that particular chapter. Now, of course, there'll be some theoretical question, because you should know that yes, of course, some theoretical question can be asked. However, probably case study based question will be asked in CA final financial reporting paper. We'll be taking some important question. If that type of questions come, how to handle that question in exam. Normally what happens, even though we are conceptually strong, even though we know the subject, even though we know the chapter, but in exam with multiple options, sometimes we are confused with option A and option B. Sometimes with the calculation we might do some mistake, and because of that reason we may not get the answer. So you need to be very much perfect in getting correct answer, because once again I am saying that if you can score 20 marks in each paper in MCQs, then it becomes very easy to get an aggregate of what, 50%. I'm not saying you should target 50%, but it will help you to score more than 50% very easily. Got this point? So from today we'll start discussion about MCQs chapter wise. The first chapter which I would like to take is what, business combination Ind AS 103. Can we start a discussion? Yes, sir. Let us start with the question number 1. As per Ind AS 103, already the PDF of this has been uploaded in my Telegram channel. If you want to download the PDF, you can download the PDF from my Telegram channel. The link of the Telegram channel is given in the description of my video. Got this point? Yes, sir. Let us come to question number 1. Question number 1. As per Ind AS 103, while accounting and reporting for business combination, goodwill is calculated as. The formula of goodwill is very simple. It is purchase consideration plus fair value of NCI, means value of NCI minus fair value of INA. It will be what? Goodwill or gain or bargain purchase. So that option we need to find out, consideration plus NCI minus net asset. Option number A is only correct. I don't think so. You need to read option number B, C and D in this case. Very simple. Question number 2. How is NCI interest shown in the financial statement of the acquirer at a time of business combination under Ind AS 103? So how NCI is shown in the balance sheet? So it is shown as a liability, not correct. It is shown as an item under equity. It is correct. But normally sometime what happen? Option B is correct. But sometime what happen? Option C or option D might be more perfect answer. Correct now. So you need to read all the options. Sometime what happen? We have read option number A and we have make one selection that yes, option number A is correct, but quite possible that option number C, your option number D might be more perfect answer. So I will suggest that read all the option carefully. Read all the option, then only take some judgment about the correct option. So of course option number B is correct, but it is not shown in the balance sheet. This is not correct. NCI is not recognized. This is also not correct. So option number B is only correct. Chalega? Yes, sir. Question number 3. At what value NCI interest recorded in the books of Aquari at the time of business combination transaction under Ind AS 103? It is recognized at fair value only. Yes, it is correct. It is recognized as proportionate fair value of identifiable net asset only. This is also correct. Means it is recognized by two methods, either fair value method or proportionate share in INA method. So it is not recognized at all. This is not correct. It is recognized either at fair value or at proportionate fair value. You can see option number A seems to be correct, but they have said only fair value method. This is not correct. So sometime what happened, we have just read option number A, we have just selected it. This might be wrong. Read all the option carefully. Read all the option, then only make some judgment. So option number D is correct. Question number 4. As per Ind AS 103, while accounting and reporting for business combination, goodwill is calculated as same question have been asked two times, but here the options are different. Consideration plus NCI plus fair value of previously held equity interest in Aquari minus net asset. So of course, option number A is correct only. So you can read BCD. BCD is not correct. Option number A is correct. Chalega. Then coming to question number 5, Ind AS 103 has a wider scope than, of course, the corresponding accounting standard is AS 14. So option number B is correct. Option number B is correct. Question number 6, if a parent loses control of a subsidiary, it shall de-recognize the asset including any goodwill and liability of the subsidiary at their carrying amount at the date when the control is lost. So of course the option number is correct, because whenever there is a loss of control, we de-recognize all the asset including goodwill and the liability at the time when the control is lost at their carrying amount. Option number A is correct. But read B and C and D also. It might happen that there may be some other option which is also correct. Option number B, the carrying amount of any NCI in the former subsidiary at a date when the control is lost, including a component of OCI attributed to them. So of course NCI will be also de-recognized. So A is also correct, B is also correct. The fair value of consideration received, if any, from the transaction, event or circumstances that resulted in the loss of control. So of course fair value of consideration received is recognized, not it is not de-recognized. So we recognize the fair value of consideration received. So option number C is not correct. So both option number D is correct, both A and B. Understood? Have you understood? Yes, sir. Coming to question number 7. In business combination, control of business can be obtained by acquiring asset and assuming liability. Such assets and liability must constitute a business, otherwise it is not a business combination. So option number A is correct. We can do business combination, means control can be acquired by acquiring assets and liability, correct, which constitute a business. Then of course it is a business combination. By acquiring share, this is also correct. Option number A is also correct. Option number B is also correct. By acquiring share means more than 50% of voting right. More than 50% of voting right. Correct. So by acquiring share, we can obtain control. That is also correct. By other legal process, of course, by other legal process also we can obtain control. Other legal process means by way of what? Even though there is less than 50% voting right, but then also we can obtain some power over investee. In that case also what? We can obtain control. So option number D, all of the above will be correct in this case. All of the above will be correct in this case. So option number A is also correct. Option number B is also correct. Option number C is also correct. All of the above. I'll just give one hint. When A and B are correct, A and B are correct, and you have a doubt about C, and there is what? All of the above. So of course D, all of the above will be only correct. Understood? So A is correct, B is correct. You have doubt about C. You have a doubt about C, but they have given one more option, D, all of the above. So 99.99% all of the above will be only correct in this case. Chalega? Yes, sir. Question number 8. When after business combination Aquari ceases to exist, Aquari ceases to exist means Aquari is liquidated, it is to be recorded in the books. It is recorded in the books of the acquirer in one set only, in his standalone accounts. Of course, when the acquiry is liquidated, means when the acquiry is not liquidated in case of subsidiary, then we prepare consolidated financial statement. But in case of absorption, when acquiry company is liquidated, the entire business combination transaction recorded in the individual books of account of acquirer company. So it will be acquirer. Option number A is correct. Option number A is correct. Got this point? Yes, sir. Question 9. As per Ind AS 103, accounting and reporting for business combination is done under. So of course, as per Ind AS 103, for business combination we have acquisition method. So option number A is correct. This is a theoretical question. Correct. Of course, very simple. Then question number 10, as per Ind AS 103, Appendix C, accounting and reporting of business combination under common control, we have which method? Pooling of interest method. So option number C will be correct. Got this point? Yes, sir. Coming to question number 11, A Limited acquired 60% equity shares of S Limited for rupees 60 lakh. At the date of acquisition, the fair value of net asset is 80 lakh and the fair value of NCI is 45 lakh. So what is the formula? PC is equal to 60 lakh. Fair value of NCI is 45 lakh. Total become 105 minus fair value of INA 80. So goodwill become 25. So 25 lakh goodwill. So determine the amount of goodwill arising on acquisition of S Limited. If NCI is measured using fair value method, read the question carefully. They might have said ki use proportionate share in INA method. To read the question carefully, so they have asked you to use NCI by using measure NCI by using fair value method. So your option number A will be correct. Yes, sir. Coming to question number 12, A Limited acquires 60% of MN Limited on 1st Jan 2018 for rupees 1 lakh cash payable immediately and rupees 1,21,000 after 2 years. So 1,21,000 deferred consideration which will be measured at present value. So we can find out present value if the rate of discount is given. The fair value of net asset on acquisition amounted to rupees 3 lakh. Cost of capital of A Limited is 10%. So we can do discounting for 2 years. So 1,21,000 multiplied by present value factor at the rate of 10% for 2 years will be also equal to 1 lakh. Correct now? It will be equal to 1 lakh. So your total PC become 1 lakh plus 1 lakh, that is 2 lakh. Total PC become 1 lakh plus 1 lakh, 2 lakh. Then they have given NCI is measured by using proportionate share in INA method. So what is the fair value of INA? Fair value of INA given 3 lakh. So this is 60%. So 40% of how much? 3 lakh is the fair value of INA. So 3 lakh into 40%. How much coming? 1,20,000. So 1,20,000 is NCI. Total become how much? 3,20,000. 3,20,000. From this you'll minus what? 3 lakh, that is INA. INA you'll deduct. So it is coming goodwill how much? 20,000. So goodwill become 20,000. So you can see option number A is correct, 20,000 goodwill. So be careful. It is very simple question, but this type of question can be asked for 2 marks question. Chalega? Yes, sir. Coming to question number 13. Nickel Private Limited acquire 100% of Coal Private Limited on 1st Jan 2018. The fair value of PC was 10 crore, consisting of ordinary shares of rupees 100 each in Nickel Limited. So they have given PC fair value is 10 crore. The fair value of net asset acquired was 7.5 crore. At the time of acquisition, the value of ordinary shares of nickel and the net asset of coal were only provisionally determined. So I hope you remember the concept of measurement period. If the business combination accounting is not completed before the approval of financial statement, then we can do accounting of business combination on provisional basis. Then Ind AS 103 will allow a measurement period which should not be more than 1 year from the date of acquisition. Correct? So on November 30, 2018, on November 30 means the date of acquisition was 1st Jan 2018. On November 30, it was finally determined the fair value of nickel shares was 11 crore and the fair value of net asset of coal was 8 crore. So okay, this is within 1 year from date of acquisition. So of course this information can be taken into consideration. However, the directors of nickel have seen the fair value of company shares decline since Jan 1, 2018. So can you say the fair value share decline after Jan 1, 2018, that is actually related to facts and circumstances after acquisition date, which is not relevant for business combination accounting. So any decline in the fair value shares after acquisition date is not relevant for business combination accounting, and wanted to adopt fair value shares as of Feb 1, 2019, which result in the fair value consideration at being valued at 9 crore. So this information is not relevant because it is related to facts and circumstances which existed after the date of acquisition. So this entire information is not correct, means will not be taken into consideration. What is the value of PC and the fair value of net asset of Coal Private Limited as on the date of acquisition? So it will be based on the measurement period, whatever information has been obtained. So that will be 11 crore and 8 crore. This option is correct. We can see purchase consideration of 11 crore and net asset of 8 crore will be the correct option. However, you might be confused with this information 10 crore and 7.5 crore, but this is the provisional fair value. So this should not be taken into consideration for the actual accounting. Got this point? Yes, sir. So option number A is only correct. Yes, sir. Point number 2, in addition to the above purchase consideration, the acquisition agreement state that an additional 2 crore will be paid if the Coal India Coal Private Limited achieve a turnover of rupees 80 crore in the next 2 years. On the date of acquisition, the fair value of said consideration is 1.5 crore. In Feb 2019, due to coal declining performance, it is determined that it is unlikely that it would meet the budgeted turnover of 80 crore. So can I say there is a contingent consideration? Contingent consideration should be taken into consideration to determine PC, and it will be recognized at fair value on the date of acquisition. So any subsequent changes will be accounted, but that will be subsequent accounting. On the date of acquisition should be taken at fair value on the date of acquisition. Chalega. The how should nickel treat the above consideration? Nickel should not recognize the consideration. This is not correct. Nickel should disclose the consideration as it is contingent liability. This is also not correct. Nickel should recognize the fair value consideration as a part of business combination, thus increasing the goodwill and remeasure it at the end of each reporting period. This is only correct because can I say if the PC will increase, so goodwill also increase. So if you increase the PC by the amount of fair value of contingent consideration, so your goodwill increase, and we'll do subsequent measurement for this particular contingent consideration. The impact of change in the fair value is recognized in the statement of profit and loss. So of course, if there is any changes in the fair value of contingent consideration, we'll do subsequent accounting, subsequent measurement, and any difference will be transferred to profit and loss account. So option number C is correct. Option number C is correct. Good question. Yes, sir. Question 14. P Limited acquired 95% of issued share capital of S Limited on 1st October 2017 by way of share for share exchange. So 95% they have acquired. The profit before tax of P and S for the year ended 31st March 2018 are 2 lakh and 1 lakh 50,000 respectively. For the entire year, they have given profit. What is the date of acquisition? Date of acquisition is 1st October 2017. Okay, profit of S Limited will be included in the consolidated financial statement of P Limited from date of acquisition. So date of acquisition means from 1st October 2017. It means your post acquisition period is 6 months. Post acquisition period is 6 months. How much profit before tax would be shown in the consolidated statement of P Limited for the year ended 31st March 18 in accordance with Ind AS 103? The entire profit of P will be shown 2 lakh, and half profit of S means 75,000 will be shown. 1 lakh 50,000 divided by 2, 75,000 means for 6 months. So it will be 2 lakh 75,000. Option number 2 is correct. Option number 2 will be correct. Chalega? Yes, sir. Coming to question 15. PQR Holding Limited enter into a number of transactions each year. The accountant has requested your help to identify which of these must be accounted for business combination. PQR Holding Limited purchased 30% equity in TP Limited, an unlisted company, but 30% will not give control. It will give rise to significant influence. Therefore, can I say this will not be identified as a business combination transaction? Chalega? PK Holding Limited purchased a 45% interest which give it control over TR Limited, because it is given, it will give control over TR Limited. So we know that there can be some de facto power, means even though we are not holding majority of voting right, then also there may be de facto power if it is widely disbursed, or we may do some agreement with other vote holder. Correct now? So this might be correct option. Let us read all the options. PK Holding Limited purchased one of many brand name and product of TQ Limited. This is an asset acquisition, so this will not result in business combination. Only they are purchasing the intangible as a brand name and product, so this will not result in business combination. PQ Holding Limited purchased a 30% equity and invest in the debenture of STS Limited. This will also not give rise to control. So only option number 2 is correct. So option number 2 will be correct option. Chalega. Now come to question number 16. Entity C acquire entity D as per the principle of Ind AS 103 business combination. Fair value of identifiable asset is 10 lakh. Fair value liability assumed is 6 lakh. Consideration paid for the acquisition of entity D is 5 lakh. Goodwill on acquisition is deductible for tax purpose. Oh, they have given goodwill is deductible for tax purpose, means this point has been given for calculation of deferred tax. Now whenever goodwill is deductible for tax purpose, we'll calculate DTA or DT or DTL on initial recognition of goodwill. But if goodwill is not deductible for tax purpose, we will not calculate any deferred tax on initial recognition of goodwill. You need to compute the goodwill amount to be recognized in the books of acquirer, that is entity C, at acquisition date. Assume tax rate they have given 30%, means in this case first you need to find out goodwill, and you can see in this question they have not given carrying amount of INA, so we will assume that carrying amount and the fair value of INA are same. It means there is no taxable temporary difference on initial recognition of INA. Initial recognition of INA. The first, what is purchase consideration? Purchase consideration is how much? It is given 5 lakh, and INA is given how much? INA, it is 10 lakh asset and 6 lakh liability, means 4 lakh is what? Your INA. So what is goodwill? Goodwill is coming 1 lakh. So on this goodwill will create a deferred tax liability because this will be the fair value of goodwill, and the carrying amount means the tax base of goodwill will be 0. The tax base of goodwill will be 0. So on this will create 30%. It means your DTL deferred tax liability will be 30,000. Deferred tax liability will be 30,000. If deferred tax liability will be 30,000, so if the liability will increase, so can you say your goodwill will also increase? If your liability will increase, so your goodwill also increase. Means what journal entry you'll do? Just try to understand. INA, how much INA account debit? INA account debit 4 lakh. To purchase consideration. Purchase consideration is how much? 5 lakh. And if you write down to DTL, DTL how much? 30,000. So what is the difference? Difference will become goodwill. Goodwill become how much? You can see 1,30,000. So your answer will be goodwill 1,30,000. If in this case, suppose it is given that goodwill on acquisition is not deductible for tax purpose, which is actually correct from Indian Income Tax Act point of view. So as per Indian Income Tax Act, goodwill is not deductible for tax purpose. Means if whenever question is silent, we'll always assume that goodwill is not deductible for tax purpose, and on that we'll never calculate any deferred tax. Correct? But because it is given goodwill on acquisition is deductible for tax purpose, we need to create detail on that goodwill initial recognition. Understood? So in this case, the amount of goodwill to be recognized will be 1,30,000. Got this point? Yes, sir. Coming to question 17, entity A hold 20% interest in entity B. Subsequently, entity A further acquired 50% shares in entity B by paying 300 crore. So already they were holding 20%. Again, they acquire 50% by paying how much? 300 crore. So this is nothing but a question of step acquisition. The fair value of assets acquired and liability assumed are as follows. Building 1000, cash and cash equivalent, financial liability detail. Fair value entity B is 400 crore and fair value NCI is 120 crore, and the fair value entity A previously held equity interest 80 crore. Calculate fair value gross asset acquired. This fair value gross asset acquired, if you have done the meaning of business combination, business, we have done the meaning of business. So when we apply concentration test for business definition, so there is one point that if the fair value of gross asset acquired is substantially equal to the fair value of asset acquired or fair value of group of asset acquired, so this will be actually an asset acquisition, if you remember the concentration test. So we need to here calculate a fair value of gross asset acquired. So how to calculate fair value of gross asset acquired? First find out PC which has been paid to acquire 50%, that is 300 crore. Then fair value of previously held equity interest, so this is 50%. Fair value of previously held equity interest is 20%, that is 80. And the fair value of NCI is how much? That is 30%, that is also given 120. What is the total of this is what? 300 plus 80 plus 120, that is 500. In this we'll add all the liability assumed excluding DDL. So fair value of liability assumed, fair value liability assumed, so you can see only one liability is there, 800. So 800 will be added, and from this will minus cash and cash equivalent as well as any DTA. So any deferred tax asset given in the question or cash and cash equivalent given in the question will be deducted. So you can see cash and cash equivalent 200, so we'll deduct 200 from this. So it will be how much? 800 plus 500, 1300 minus 200, 1100. So 1100 is the fair value of gross asset acquired. So this one formula is what? To find out fair value of gross asset acquired, it is fair value of consideration paid plus fair value of previously had equity interest plus fair value of NCI plus fair value of liability assumed excluding DTL minus cash and cash equivalent minus DTA if any. Correct now. So that will become fair value of gross asset acquired. So 1100 is the answer. Option number 1 is correct. The above transaction, now just find out what is the building fair value. Building fair value is 1000. Now compare 1000 with 1100. So 1000 divided by 1100, it will come how much percentage? Is coming around 90.09%. So can you see in this case substantially all the fair value of gross asset acquired is concentrated in a single identifiable asset, and therefore the test will be satisfied, and therefore it will not be a business acquisition, it will be considered as an asset acquisition. So the above transaction is an asset acquisition. Option number 2 will be correct. Got this point? Yes, sir. Now coming to question number 18. A suit for damages worth rupees 10 million was filed on Company B for Ali's breach of certain contract provisions. Company B had disclosed the same as contingent liability in the financial statement as it considered that it is a present obligation for which it was not probable that amount would be payable. Company acquired Company B and determined the fair value of contingent liability 2 million. How much liability will be recognized by Company A in its financial statement as part of acquisition accounting? So if you remember about contingent liability, so any contingent liability of acquirer will be assumed, which will be recognized in the books of acquirer if two conditions are satisfied. If there is a present obligation arising from past event and fair value of that liability can be measured reliably. So it can be recognized even though the outflow of resource is not probable, means we are not supposed to apply the condition of IND AS 37. IND AS 37. So even though condition given under IND AS 37 is not satisfied, we can recognize such contingent liability in the books of acquire as provision. So amount it will be recognized at 2 million. So what is the fair value? Fair value is 2 million. So it will be recognized in the books of acquirer at fair value, that is 2 million. Chalega? Yes sir. Coming to question number 90. Changes to deferred tax arising from business combination impact goodwill or gain on bargain purchase. So any deferred tax which is created on initial recognition of INA on the date of acquisition will affect goodwill or gain on bargain purchase. So option number C will be correct. Chalega. So option number A and B are dangerous. Means most of the student will tick option number A and B, but it will be adjusted with goodwill or gain on bargain purchase. Question 20. KKB acquired 100% interest in Viva Limited, a company owned by a single shareholder who is also a KMP in the company, for a cash payment of $20 million. So for a cash payment of 20 million and a contingent payment of $2 million. The terms of agreement provide that payment of 2 years after acquisition if the following conditions are met. So this will become a contingent consideration. The EBITDA margin of the company after 2 years after the acquisition is 21%. The former shareholder continue to be employed with Viva for at least 2 years after acquisition. No part of contingent payment will be paid if the former shareholder does not complete a 2-year employment payment. Okay, this contingent payment is the amount payable to employee shareholders which can be forfeited if the employee terminate. Therefore, it is paid in the capacity of employee. It is not paid in the capacity of owner. Therefore, it will not be included in the PC calculation. Therefore, in this case, the PC will be only $20 million and the fair value of contingent consideration will not be taken into consideration because that is a payment to employee shareholders in the capacity of employee, not in the capacity of owner. Chalega? Yes, sir. So here PC will be only $20 million. Okay, sir. Question 21. ABC Limited acquired all of the outstanding shares of XYZ Limited in a business combination. XYZ Limited had 3 shareholders with an equal shareholding, 2 of whom were also senior level employee of the XYZ. Means out of 3, 2 are employee shareholders and would continue as employee for the post acquisition of shares by ABC Limited. The employee shareholders each will receive 60 lakh plus. So 60 lakh is a fixed payment that will be included in PC plus an additional payment of 1 crore 50 lakh based on a multiple earning over the next 2 years. So can you say the additional payment is a contingent payment? Additional payment is a contingent payment. The non-employee shareholders each receive rupees 1 crore. The additional payment of each of these employee shareholders will be forfeited if they leave the employment of XYZ Limited at any time during the 2 years following the acquisition by ABC Limited. This contingent payment can be forfeited if the employee shareholder terminate. Therefore, it is a payment in the capacity of employee, not a payment in the capacity of owner. Therefore, will not be included in calculation of PC. Chalega? The salary received by them is considered reasonable remuneration for their service. This is not at all important. How much amount is attributed to post combination services? The amount attributable to post combination services will be, there were 2 employee shareholders and the contingent payment is how much? It is 1 crore 50 lakh. So 1 crore 50 lakh into 2, that will be how much? 3 crore. So 3 crore, option number B will be correct, which will be attributed to post combination services, and that will not be included in PC. Suppose in this question they ask you what is the amount of PC. So 60 lakh is the fixed payment multiplied by 2 because 2 employee shareholders and 1 crore is payable to non-employee shareholders. So the total become how much? 1 crore plus 1 crore 20 lakh. That will become the amount of PC if they ask you PC calculation in this particular question. Chalega? Yes sir. Coming to question 22. Company acquires 70% of Company S on Jan 1, 2001 for a consideration transferred of 5 million. What is the consideration transferred? 5 million. Company A intend to recognize the NCI at proportionate share of fair value of identifiable net asset. With the assistance of suitably qualified valuation professional, A measure the identifiable net asset at 10 million. A perform a review and determine that business combination did not include any transaction that should be accounted separately from business combination transaction. Means there is no separate transaction which is not a part of business combination transaction. Calculate goodwill or gain on bargain purchase in the process. Okay, we can calculate. So what is the PC? PC is 5 million. 5 million means 50 lakh. Then what is the net asset? Net asset is 10 million. 10 million means 100 lakh. So 10 million means 100 lakh. So INA is what? 100 lakhs. And 30% of INA. 30% of INA means how much? NCI will be 30% of INA means 30 lakh. So this become 80 lakh. So gain on bargain purchase will be 20 lakh. So gain on bargain purchase 20 lakh is the answer. Correct? Gain on bargain purchase 20 lakh is the answer. Simple. Okay, sir. Coming to question number 23. A suit for damages worth rupees 10 million was filed by Company B for alleged breach of certain contract provision. Company B had disclosed the same as contingent liability in its financial statement, as it is considered that it is present obligation for which it was not probable the amount would be payable. Okay, it is not probable that amount will be payable. Similar question we have done. Company A acquired Company B and determined the fair value of contingent liability to be 2 million. What will be the treatment of contingent liability in the financial statement of Company A? So contingent liability will be recognized as a provision. Correct now. That is the only answer if the fair value of the contingent liability is given. So there is a present obligation arising from past event, and fair value can be measured reliability. It can be recognized even though outflow of resource is not probable. That is the only answer. So company would recognize 2 million in his financial statement as a part of acquisition accounting, even if it is not probable that payment will be required to settle the obligation. This is only correct. Option number A is correct, but read option number B. Company will recognize 2 million in his financial statement as a part of acquisition only if it is probable. This is not correct. Means even though it is not probable, it can be recognized. Company A would not recognize 2 million. This is not correct. Company A would not recognize 2 million. This is also not correct. So option number A is more perfect. Option number A is correct. But if the option number A is given at the end, this becomes a dangerous question. Understood? Yes, sir. So option number A is correct. Come to 24. Deepak Limited, an automobile group, acquired 25% of voting ordinary shares of Son Limited, another automobile business, by paying 4320 crore on 1st April 2019. So they acquired 25%, means significant influence. Deepak Limited account is investment in Son Limited using equity method as prescribed under IND AS 28. At 31st March 2020, Miss year end, Deepak Limited recognizes share of net asset changes in Stone Limited using equity accounting as follow. So share in PL, this will be added to investment as per Ind AS 28. Share of exchange difference OCI, this will be also added, and share of revaluation reserve of PP in OCI, this will be also added. So what will be the carrying amount of investment as per Ind AS 28? It will be 4320 plus 378 plus 54 plus 27. That will come 4779. Once again, 4320 plus 378 plus 54 plus, correct, and 27 plus. It is coming 4779. Yes, sir. On 1st April 2020, Deepak Limited acquired 75% Son Limited for a cash of 13,500 crore. So they again acquired 75%. This is a question of step acquisition. Fair value of 25% interest in already owned was 4860 crore, and the fair value of Son Limited identifiable net assets 16,200. How much goodwill should be recognized? So this is a question of step acquisition. So what is the PC for 75%? It is 13,500. Then what is the 25%? The fair value of previously held equity interest for 25%, that is given 4860. So we'll take 4860. And fair value of INA on the date of acquisition, that is given how much? 16,200. So 16,200. So minus करेंगे, this will be minus. What will be the answer? Check करो. 13,500 plus 4860 minus 16,200. The answer is coming 2160. So goodwill of 2160. Option number B will be correct. Option number B will be correct. But there is one more question. How much gain on previously held interest should be recognized? How much gain? How much gain? So you can see what is the carrying amount. Carrying amount is 4779. What is the fair value? 4860 minus 4779. So what is the gain? 4860 plus 4779. Second, 4860 minus 4779 is coming 81. 81 is the gain. This is remeasurement gain. But there is one more gain. You can see share of exchange difference OCI. Can you see this is OCI and accumulated in FCTR? And share revaluation reserve of PP in OCI. This is accumulated in revaluation surplus. Now, as per Ind AS 21, as per Ind AS 21, whenever uh, the foreign operation is disposed of, so this will be reclassified. This OCI component will be reclassified from OCI to PL. So can I say what Ind AS 28 say that whenever equity method is discontinued, then OCI component which have been already accounted as per respective Ind AS, which have been already accounted as per Ind AS 28 will be de-recognized as per respective Ind AS, correct? So this will be reclassified to PL, but revaluation reserve, revaluation surplus as per Ind AS 16 will be directly transferred retained earning. So can I say out of 54 and 27, 54 will be recycled to PL. So 81 will be increased by 54. 81 will be increased by 54. And what is the total gain? 81 plus 54. So total gain become 135. This will be transferred to PL. This will be transferred to PL. Understood? So what is the answer? Gain on previously held interest in Stone Limited recognized in PL is 135. Option number A is only correct. Option number 2, recognized in OCI is not correct. 81 is not correct. 81 is not correct. So option number A is only correct. I hope you have understood this point. This very important question can be asked either of 2 marks in MCQs or can be asked as a 5 to 6 marks as a descriptive question also. Got this point? Yes, sir. Come last question. On 1st April 2018, the KK Limited has acquired 80% of equity interest in CK Limited, a private entity, in exchange for cash of 150 crore. This is PC. Because the former owner of CK Limited needed to dispose of their investment in CK Limited by a specified date, they do not have sufficient time to identify other potential buyer. So because the former owner of CK Limited needed to dispose their investment in CK Limited by a specified date, they do not have sufficient time to identify the other potential buyer. Means can I say this point indicate that there is an evidence of bargaining. Means there is an evidence that there can be some bargain purchase. Understood? So what our Ind AS 103 said that whenever there is an evidence of bargaining, then gain on bargain purchase will be transferred to OCI and accumulated in a separate component of equity, that is capital reserve. But if there is no evidence of bargaining, then gain on bargain purchase will be directly transferred to capital reserve. Correct? So this gives an indication that there is an evidence of bargaining. Means bargaining is possible. Additional information with respect to said acquisition are as follow. The identifiable asset is 250 crore and liability assumed is 50. Means INA become how much? 200 crore? 200 crore. The company has also engaged in independent consultant who determined that fair value of NCI 20% is how much? 42 crore. So what is PC is 150, 42 is NCI, total become 192 and INA is what? 200. You can see 8 crore is the gain on bargain purchase. So gain on bargain purchase will be transferred OCI and accumulated in a separate company equity, that is capital reserve. This is only correct answer. So company has requested to suggest the accounting treatment on the above acquisition as per Ind AS. So gain on bargain purchase of 8 crore will be recognized OCI and accumulated retained earning. This is not correct. Gain on bargain purchase of 8 crore will be recognized directly in capital reserve. This is also not correct. But just give round. Means you need to choose the perfect answer. Gain on bargain purchase of rupees 8 crore will be recognized in PL. This is not correct. Gain on bargain purchase 8 crore will be recognized OCI and accumulated in capital reserve. This option number D is more appropriate. If option number D is not given, then you can say option number B is also correct. But option number B and D both are given, so option number D become more appropriate. I hope this entire discussion will help you to understand how to solve MCQ for business combination chapter. Correct? If you have understood, just leave a comment in the comment box. Next chapter what you want for MCQ discussion and whether you have liked this idea of discussion of MCQs or not, whether it will help you in the preparation of MCQs or not. Correct? And like this video, correct, share this video to your friend so that others will also get benefit about this particular video. Correct? Thank you very much for this particular video. Hope to meet soon with the next chapter, next MCQ chapter. Bye bye. Till then, all the best for your preparation.